What's up, ladies and gentlemen? This is Brian Mitchell, Brian's Axelrod, coming to you live Sunday, September 28th of 2025, roughly around 9 p.m. Eastern. I day trade typically, but I do want to give the broad strokes of what I see in the market. The last couple recap videos have hit a nail on the head, quite literally. So let's see if I can keep the streak alive. I'm going to go over SPY, QQQ, IWM, which is a Russell, small cap stocks, and then Bitcoin and Ethereum, see what I see on different time frames. I do all of these just by winging it. So if you guys have comments on how I can improve or what you guys would like to see or anything like that, feel free to leave them in the comments below. This channel is still small enough for me to respond to each and every one. So, trade algo. We had a couple good trades on Friday. A SPY put and something else. I can't remember, but let's get into it. Here we go. Let's start off with SPY on the daily time frame. Usually the bigger the time frame, the more respected and reliable things are. So let's actually open up the technical analysis Bible before I start jabbering on about the charts. So these are rules of technical analysis that if you have them memorized, give me a quick second, guys. If you have them memorized, it will serve you immensely well, guys. There are rules of technical analysis in the charts that are the guardrails to your bumper car, is the analogy I give students at Trade Algo. So I recommend reading them every day as I do. It says here on my guidelines, I do read this document every single day, and they're going to be provided, as always, in the description of this video, beneath the video. So, looks like SPY created a little bit of a fake out, and we did say that that was potentially the case because the other indexes did not get a lower low like SPY did. So I look at candle closes, ladies and gentlemen. Everyone has a different way of doing charts. I don't pay attention to wicks or shadows, whatever you guys want to call them. All right, basically the thin part of the candlesticks. I have a tunnel vision for where the charts are. Come to think of it, this could be the higher low right here, and I was primarily focused on this one right here because we did hold this higher low, right? That could be the case, and I'm going to zoom out to the weekly because sometimes we do get a fake out on the daily and the weekly is respected. Why is the weekly respected more than the daily? Because the bigger the time frame on the charts, everything is more respected on the weekly than the daily, on the daily than the 4 hours, so on and so forth. And that includes every single indicator, every line you draw, everything, right? So now we're just kind of consolidating. So consolidation is basically not forming a lower low and not forming a higher high, right? Because uptrends are higher highs and higher lows. Higher highs by beating this one. And then as long as we stay above this higher low, it could be a very aggressive higher low. It doesn't even have to be that aggressive. It could be a higher high and then a higher low and then a higher high. And then lower lows are lower lows, lower highs, lower lows, lower highs, lower lows, maybe some consolidation, lower lows, lower highs, lower lows, right? But when you don't have in an uptrend a higher high or a higher low, that's just called consolidation, which is a fancy way of saying moving sideways. Now, the one thing that makes me a bit nervous is that we're no longer underneath the 10 simple moving average. And again, I use the 10 because people use the 7, the 9, the 11, the 13, and I find the 10 to be the happy medium of all the ones that people use. So it's the one that, for me, it's like a hand in the glove, right? So we're underneath the 10 simple moving average. It is still very possible. Maybe it's not a fake out after all. I might have spoken prematurely on this one. It's very possible that now we're in a downtrend. Lower low, lower high, lower low. So I started Thursday evening's video going into Friday saying it's possible that we are bearish, I'm going to stand by that anticipation. Remember, we're not here to predict the market. Predicting the market is how beginners, folks that have a year experience or less, that's how they lose a predominant amount of their money because they trade on what they want to happen or what they heard online and then they want to manifest. They trade on their desires, not react to the market. Reacting to the market is, again, it's my number one rule. Buy calls at support with confluence or buy puts at resistance with confluence. And then once you buy whatever it is, a call or a put, see how the price reacts from there. It's called reacting to the market. So you get in at a proper place and then is it gonna keep on going and react the way I want it to, and then or should I get out, at a place that invalidates my theory? So as of right now, it looks like we're in a downtrend because of that lower low. I'm gonna maintain that I postulated that this was the higher low because I only look at candle closes. Now lower low, this is a lower high at resistance, and this is what I said on Thursday evening, that once we're in a downtrend, what happens in downtrends according to Rule 5? In a downtrend, resistance is always stronger than support. So let's see if we hold that. In the game of probabilities, I would give this a good 70% chance of it going down tomorrow. Now, it doesn't mean we have to dump immediately. Sometimes we do have a day where we stall. We might just, kind of move sideways before the dump. So keep that in mind as well. Market movers, I have a rule of thumb. The market movers will always do the most a-hole thing possible. The thing that, the obvious answer is not the obvious answer. They will forego the obvious answer and then give it to you later when everyone has given up on, right? That's how they grab liquidity. So let me go to the weekly time frame really quick on SPY. And yeah, we could get a deeper pullback, ladies and gentlemen. We could get a pullback all the way down here, and we would still be bullish on the weekly time frame. So yeah, I can definitely see this going down. So higher high, higher lows, all the way down here around the 635-ish level. Higher high, this is the first red candle. I mean, even if we come back down to the 10 simple moving average, which we're so far estranged from, the last time we tested it was beginning of September. That would be beautiful. If we come back down, even over the next couple of weeks, come back down, even liquidity grab, and then move on upwards around the 650 level, that would be gorgeous, right? I'm still mid to long-term bullish on the S&P 500. I think we can hit maybe even 7,000 on S&P 500 by the end of the year. It's not a stretch to imagine. It's only a couple hundred points away. That's not hard to imagine at all. In fact, I actually have this, not financial advice. I should probably, I should do this once a video at least. I should probably start by saying this, but I'm still getting in the mode of doing these videos every day. We don't offer financial advice, folks. This is for education. Obviously, this is my personal thoughts and opinions, which should not be construed as investment advice in any way, shape, or form. As you guys well know, sorry about that, but it should be noted before moving forward. So, yeah, I actually have on prediction markets on Robinhood, little bet, a hero or zero bet that it will go above 6,900 by the end of this year. And I have a decent amount on it. So let's go to QQQ. QQQ is, again, a little bit more tech heavy, and I don't think I've demonstrated in these videos the way I have in the past. Here's SPY holdings, and here's QQQ holdings. If you go to SPY, NVIDIA accounts for almost 8%, Apple accounts for almost 7%, and same with Microsoft. But if you go to QQQ and you just type into Google how much of Microsoft is in QQQ or whatever ticker you want, NVIDIA is almost 10%, guys. It's literally almost 10% of the pie. So that being a tech stock, Apple, same thing. Apple was almost 7, it's like 6.7. It's 1.5% or more heavier in the QQQs, right? So if Apple dumps or NVIDIA dumps or Microsoft dumps, you're going to get a more pronounced, deeper move downwards in QQQ. But if Apple pumps, NVIDIA pumps, or Microsoft pumps, QQQ is going to look a lot more bullish than SPY. So you have to keep that in mind. I still see way too many beginners, and this is not a knock on them, but they should not be trading what they don't understand. It's like operating a car without knowing you have blind spots. That's just asking for an accident, right? Because I still see a lot of beginners trade SPY like it's a single company. They don't know what it's composed of, or QQQ, right? When you're trading an ETF, you have to know what that ETF is composed of and then keep an eye on those things so that you can navigate it accurately, right? So I imagine Qs are going to look a little bit more bullish than SPY. Yep. It did not form a lower low. In fact, the uptrend is still looking pretty sweet and pretty solid. Here's the higher low, higher high, higher low, higher high, higher low, higher high. Here's the higher low, it appears. And we could just keep on moving up, right? It's very possible, but I think SPY will drag us down. And yeah, this is reclaiming the 10 after closing underneath that. I think SPY will drag us down. Maybe Qs will consolidate and stay at the higher low tomorrow while SPY experiences a deeper move and we barely keep the uptrend alive on QQQ tomorrow. That kind of smells like what's going on. And then we'll decide on Tuesday if Qs will stay alive or not, right? But this market is feeling, the word is frothy. If you don't know what the word frothy for market means, like a little bit overvalued relative to the fundamental actual price of what the stock should be. From a fundamental perspective, it's not frothy because of inflation. Inflation is where the dollar gets debased. So people that understand your dollar is being burned and keeping cash is a fool's errand, they put their money into assets, gold, guns, real estate, and stocks. I'll repeat that again. Commodities like gold and silver, guns do increase in value as well. I'm not saying that to be political. You can look that up yourself. Real estate and stocks or equities. I should probably say equities over stocks, because crypto is included in that bunch as well. So because inflation's high, it kind of makes sense that the market is just plowing higher because our inflation is still, I don't believe this. I don't believe Jerome Powell that inflation's 3%. I know what I pay at the grocery store. It's way different than it was 5 years ago. So this 3% inflation, I don't know. Someone hasn't explained that to me. Maybe I'm dense, but in the sense that they're going up and we haven't got crazy earnings or crazy, bullish wedge breakouts on high time frames or anything. This market does seem frothy, like it's just plowing forward without any other fundamental indicators letting us know, yes, the value of this company is increasing and therefore the price should go up. If we're looking at it from the fundamental perspective of in regards to inflation, then maybe not so frothy, right? It kind of makes sense. So it just feels a little overbought, right? This marching upwards without rhyme or reason besides holding higher lows on the daily time frame. So I think tomorrow will be a little bit of an uneventful day, and that's just to manage your expectations. I'd like to give this awesome prediction and say, look into Brian's crystal ball, and we can all, make a lot of money. But Monday and Tuesdays are typically the slowest days of the week trading options, right? So it's also the days where people FOMO the most, right? You want to control your fear of missing out. Making emotional decisions in the market and mistaking them for logical ones is something I used to struggle with, and I hope none of you folks do as well. IWM, I believe, held its uptrend as well, and now just this one is definitely looking more consolidation-like. I believe like QQQ, this one will follow the Qs because it followed the Qs last week. It's going to follow the Qs this week, and it looks like the exact same setup. It might come down. This is kind of like a perfect marriage between SPY and Qs. See how it stopped right at the 10, like SPY did, but it also held the uptrend like Qs did. So it's kind of like taking a little a page out of each playbook. So we might, I think the chances of going down tomorrow but keeping the uptrends on both Qs and IWM are higher than most would anticipate, right? It wouldn't surprise me also to get into an uptrend. I said the chances of us going down and consolidating are maybe 70%, and the chances of just plowing up forward maybe 30%. I wouldn't jump out of a plane with a parachute with either of those with chances. So that's why I like to play things by ear, and that's also why I don't swing trades. I will only swing if I see like a good 90% chance of holding positions overnight. And then that way I don't have to worry. I sleep like a baby. I sleep like a baby, not knowing is my play good? Is it not? Is news gonna wreck my play or not? Because I know I don't have a crystal ball, and because I know the news it drives the market lately in this news-driven market, I simply don't swing, and it's actually one of my guidelines. It's guideline 10. So for my own personal trading, right? So let's take a look at Bitcoin really quick, and then Ethereum and wrap up. Bitcoin is in a downtrend, so I think we get one more flush before we finally get the pump in October. That's what CT, Crypto Twitter, has coined Q4 of the crypto market, because if you look historically, the seasonality of crypto is that it usually experiences a very good Q4 last quarter of the year. So that's going to be starting in a couple days on October 1st, which is Wednesday. So that's when monthly charts also close. So I'm going to have to spend a little bit of extra time on Wednesday making sure the monthly simple moving averages, monthly lines on my charts, that they're all nice and tidy going into Wednesday. All right. So something to keep in mind if you guys do chart for yourselves. But you can see here that we were higher high, higher low, higher high, higher low, higher high, higher low. And then, we got through a lower low. This one and this one, we broke through both of those higher lows into a lower low. Now we're just printing a lower high before we get smacked down. And then again, remember I said in this in the video, I think maybe it wasn't the last video on Thursday evening, maybe it was Wednesday evening, that I mislabeled. It was supposed to be September 24th, but I put September 23rd by mistake. This black box is my mega buy zone between 104 and 107. Heck, if we get 100K, that will be wild. That's a psychological level where I will be eating that up. I will be eating that up like a fat kid on cake. But I do potentially see a small bounce around the 107.5 level. 107.5 is going to be a really strong buy zone. If it's the following day, 107, and if it's the following day, October 1st, if we hit 106,700, we're more than likely to just liquidity grab all the way down to 105,600. And then heck, if we get a 105,600, the bearish momentum is already there. Might as well swoop and grab the 200 simple moving average, which we haven't tested in a million years. And what do we know about, huge supports that we haven't tested in a while? Look no further than Rule 12. The first touch of a major support is typically the strongest bounce. So it just depends on the speed of us coming down. But I could definitely see something like that happening. Right? Even if we don't do a sharp bounce immediately upwards, because market movers like to do what they do, they'll kind of do something like this, and then move on upwards. This is where they scare people like, oh, we're going to keep going down. It looks like a bear flag, blah, 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 blah. It's interesting that people post their actual emotions online when I'm just like, dude, you're not being logical at all. In fact, there's a lot of institutional buying between 100. I see some stink bids there, kind of like the dark pool of crypto. There is something that exists where you can see the liquidity of the big boys and where they put $4 billion of purchases and $7 billion of purchases. It's in this black box, which is why I made it very, very distinct and very, very clear. So that's Bitcoin. I can't anticipate seeing some more downside after maybe a brief pop tomorrow. It would be great if we come back to 112. The higher we go, the sharper we drop, put it that way. So I would like to see us go higher for the next couple of days around the 112, 113 level before, we get that potential dump. I just don't see upside. I did not anticipate as much downside as we had last week when I said I see more downside, especially the speed at which it went. But hey, that's how crypto goes sometimes. And then Ethereum looks almost exactly like SPY. It is in a downtrend. That's why I have here 1 day daily downtrend. And it's about to hit the 10 simple moving average, which I let our members know at Trade Algo. I initially bought at a daily support that got invalidated somewhere around 40.20. And then, like I said, it dumped way farther than I wanted. So I averaged in this weekly support. And then I de-risk when I got to break even. And then I said, we're still in a downtrend, guys. And as I keep saying, the technical analysis Bible, it will save your butt if you know it. In a downtrend, resistance is always stronger than support. We're about to hit that daily 10 simple moving average. So for those folks that are a little bit more conservative like myself, I said, hey, take your money and run if you jumped into this trade or consider taking it, right? Because no financial advice, but um, unless there's some huge news, right? And there's also, you guys have to consider, it hasn't been talked about a lot, but there is a lot of World War III news about Israel potentially annexing the West Bank, if I'm not mistaken. I can't, please don't quote me on that, but my Twitter is kind of going berserk with potential World War III, and we're like 90 minutes to midnight, according to some analysts, and blah, 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 blah. So one little piece of news in the wrong direction or one bombing or something like that can easily, fuel this faster than I would want it to happen organically. So another thing to keep in mind, and what happens when bad news comes out, everything I just said can be thrown out the window. Remember, everything I said is from the framework of being in a neutral market where technicals work best without emotion. But again, war news will send the market into fear and panic, and nobody wants to have risk on when there is a possible nuke going off, or the president seems unhinged, or XYZ, right? Or maybe there's good news, euphoria and optimism because Larry Ellison, the third richest man in the world, just put 10% of his net worth in Ethereum. That'll be good news and cause euphoria and optimism and exuberance. So everything I just stated in this video is from the framework of being neutral and assuming that no news will tank our analysis moving forward, right? But as a recap, I think SPY and Qs and IWM might experience a little bit of downside tomorrow. Qs and IWM should hold their uptrends unless there's news. Keep that in mind. And then Bitcoin, Ethereum, I do anticipate more downwards action before getting the super pump upwards, which I'm expecting. So if we get that downward movement, I won't hold back from you guys. I'll let you know exactly where I buy. And you guys can follow if you guys see fit. Alrighty, friends and fam, as always, stay safe. Hope you enjoyed the video. Please leave a comment, like, subscribe if you guys enjoyed the content. And I will see you guys tomorrow morning. Have a wonderful and blessed evening. I'll see you guys on the winning side of the fence. Everyone, take care.